What are the highlights as far as your concerns in terms of what's not only sparked the sell-off, but what is keeping it going?
I think there are a few things that are driving the sell-off. First of all, you have concerns about the global economic and political environments, which is leading to a lot more uncertainty. Second, you also have questions in the technology sector about regulation and, of course, global tariffs. And so I think as we look out over the next couple of years, these issues may well be with us. But what we're focused on is trying to uncover interesting, fundamental opportunities in the market. And for that, we continue to approach things on a stock-by-stock basis, recognizing, of course, that there's likely to be continued noise and tweets, as it were, in the very short term.
I do have a terminal chart here showing what we have seen in the broader markets. #BTV2729. All good things come to an end. About $2.3 trillion was erased from U.S. stocks in February and March. Michael, is this here to stay? Has the mood on big tech officially soured?
Well, as I look at it, the tech sell-off here is not a sector rotation story. I think it's become so integrated with the overall S&P bull trend, let alone the NASDAQ bull trend over the last several years, that it's very hard to disentangle things. We're talking about, if you look at the FANG index, it has a forward PE of about 37 times. It has a beta of 1.1. Amazon has a forward multiple of 92 times. And it has a beta of 1.03, which is really, really striking. I don't think we've ever had in the history of the S&P significant stocks with very elevated PEs that were not regulated monopolies that also had very, very low betas. And so if the Trump tweets and if there's a sort of a galvanizing force about regulation around this sector, I think that's going to be a very enduring a market risk. And I would also point out today that everyone is focused on the break of the 200-day moving average. If you look at the 5-month or 6-month VIX contracts, they made fresh highs, higher levels today than they did back in early February, while the bond volatility index, the MOVE index, was going lower, and rates and treasuries were supported. So the real sort of regime change risk here is really, in my mind, it's never really been about bonds and inflation so much as it is about this unwind. If this unwind of the tech trade persists, it will definitely weigh on the overall market, and you're seeing that in further dated VIX futures.
Let's talk about Amazon and the tweets about Amazon specifically. President Trump obviously has tweeted a few times about Amazon in the past. He continued that over the last 24 hours, saying only fools or worse are saying that our money-losing post office makes money with Amazon. They lose a fortune, and this will be changed. Also, our fully tax-paying retailers are closing stores all over the country. Not a level playing field. Republican Senator Marco Rubio jumping in with his own tweet Monday, presumably in support of the sentiment here, saying Amazon has brought Americans lower prices but could hurt competition in the long term. Potential new economy monopolies will require close monitoring. I have another chart here, #BTV7264, which shows negative sentiment around Amazon specifically. And I wonder, Daniel, do you see Amazon in a league of its own here, or do you see Amazon in the same boat as Facebook, as Alphabet, as Apple?
I think when we look at Amazon and, frankly, many other platforms, these companies are leveraging the infrastructure, including the post office, in all the countries that they operate in. But what's important is if you take a company like Amazon, they're investing aggressively in physical infrastructure, which is also helping to create jobs. And so if you look, for example, at small businesses, many of these businesses are able to leverage the Amazon platform to reach customers in ways that they wouldn't be able to do otherwise. And so when we think about the future of Amazon and some of the other platforms, the key is really to combine the physical and the digital assets to create a user experience that keeps customers happy and keeps them engaged with these platforms. And so as we think about the medium to long term, the real important focus for Amazon and others is to innovate, to invest, and create value in what, of course, remains a very, very competitive market. And so we think Amazon has potential to continue to differentiate, and we expect them to continue to invest aggressively, both in the U.S. as well as overseas.
Now, with regard to Amazon, Bloomberg News has done the math, and when it comes to the post office, they actually do make money on Amazon. Bloomberg has done the math. That said, it is sentiment also that matters here. And Michael, I wonder if, you think we are going to see regulatory action from this administration, given what we have seen, over the last few weeks and months, just coming from the president alone?
Look, I think there's a long way from tweet to actual policy, simply because the nature of the beast here is extraordinarily complicated. What these guys do and the issues surrounding, just tying back to Facebook with what's been happening on their data side, it's very intricate, it's very complicated stuff. I just have a hard time seeing that actually, become real policy here. But and so there's another question about consumer engagement, whether that changes as well off either of these platforms. But I would certainly say that even if the news flow just persists and we don't really see a sort of a call to arms on policy in Washington, that somehow the discount rate for this group of stocks has got to be going higher and staying higher, and that means lower PEs going forwards, even if the fundamentals are not really changed.